Today we're going to go over some Fibonacci basics, how to find long-term profit targets, how to use short-term Fibonacci extensions. Now Facebook is looking very interesting with this 6-month daily double bottom pattern, and this double bottom yielded a nice 40-point move to the upside. And then we had a vicious 3-day sell-off to end last week. Does that mean the bullish rally is over? Does that mean the upward trend is no longer valid? Not necessarily. Sometimes we need a healthy retrace before we can move up again. So I use my own version of retracements. Use the 618 everyone uses. I use the 47.5 instead of the 50, and you can see how closely price adheres here. Plus I use the 28.2 instead of the 23.6. This guy is the guardian between bullish and bearish in my opinion. For staying above a 28.2, I like it. Especially if we retrace all the way down to it, that means we've had a good sell-off and we could be ready to rip. So, all that being said, that's how you can use Fibonacci retracements to find potential points of entry. Let's remove that drawing for now. Now, let's go to the 30-day 1-hour chart. You can see here is our 40-point bounce off of that 6-month double bottom. So let's measure this low to high swing, because we know all low to high swings have relationships to other low to high swings. So we can expect this upward swing to have a relationship to our previous upward swing. Since we come down to a higher low, that would give us a new long-term profit target of 295. That doesn't mean you should buy the 295 calls a month out. There could be a hell of a lot of bouncing around in between here and there. We've got our 6-month double bottom. We've got our retracement to the 28.2. And if you look closely here, we've got another double bottom to show us that that sell-off is over. Plus, we come up and sell off to a higher low. So all these things are good. How are we going to know our upward trend is intact? I like to find a decent low to high intraday swing and use that to gauge strength of an upward move. So at the beginning of this trend, I'm simply going to measure the low to high swing and pitch it off of the low. So you can see we break the 100% band and then make a new low. All you're going to do every time you break the 100% band and make a new low in either direction is move it off of that low. Then you can see we hit the 100% band again and come down to this 618 extension. So you just move that off of the new low. Now we come up 618, 282, bounce off the 8-day moving average, hit the 100% band again. Then you make a new low. So you just activate this, and at no time, if you'll notice, nothing is closing below this first blue dotted line, which is the 28.2 extension. They'll bounce off of it, they'll come close, but they're not closing below it until we get to this area here. Then we have a 3-day sell-off. So this intraday low to high swing will remain intact until it doesn't anymore, but we're going to keep using it. So we're going to pitch it off the low here from our 28.2 retracement. Let's look at the 5-day 15-minute. So let's get a really good look at things here. You can see we come up to the 61.8, come all the way down to a double bottom. Then we have this kind of wave pattern. And I bet if you took a retracement on this, it would be closing above the 28.2. And you can see it is. So it's just like the 30-day, this 30-day wave pattern is just the same thing in a smaller time frame. So you have to remember that these Fibonacci extensions play out in macro and micro formats. So you can use them on any time frame. Your long-term upward swings will have relationships to other long-term upward swings, and your short-term will have relationship to other short-term. So with our intraday move, just so everyone's clear, let's show the coefficients on the right. See, this is our 282, this is our 618, this is our 100. So we come up to the 618, come right down to a double bottom, flush out every single order, and then we're free to move higher. You can see here we make exactly the 100% band of our previous upward move from the beginning of the 30-day 1-hour rally, and then we make a new low to bounce off an upward trending VWAP, which is usually a good sign. So we're going to activate this drawing and move it off this low. Now you can see we ping pong around, bounce off the 282, bounce off an upward trending 8-day moving average, and push up past the 618. Now we're starting to come down on the 618. As long as we're closing above this 282, I will consider this upward trend intact, and I'm going to keep moving this off the new low after we break the 100% band and come down. Could come as far down as the 282. I'll just move the drawing off the new low and keep going and going and going. I'm trading shares, so I'm not worried about theta decay. If I was trading options, I would be a little more diligent about taking profits, but as there's no time decay, you have a much more relaxed approach with shares. I'm just going to let it ride. I'll make our long-term profit targets in green. We can come right down to this 282, because as long as the 282 holds, I will still consider this a bullish upward trend. But if we start to close below this, maybe I will close out my shares instead of letting it go right back down to the bottom. But I wouldn't be surprised if we came here, bounced around, came up to the 618, bounced around, and then eventually made our way up to 295. Anyways, that's how I use Fibonacci extensions to find long-term profit targets, how to use Fibonacci extensions to find short-term intraday moves, and here you can gauge the strength of an upward trend using intraday Fibonacci extensions. So I hope this helps. All it takes is a lot of practice, and you can see these swings for yourself.